you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Hello, PI listeners. Thank you for lending me your ear today. Welcome to the Passive Investor Show. I'm John Fortes. Our goal is to provide you with passive investing tips and tricks for your real estate investments. Let's get to work. Today, I want to discuss with you guys the difference between active investor and versus passive investor. And this is just a high level overview of the two differences. So let's just dive right in with active. Being an active investor, it means it involves ongoing buying and selling activity as well as daily attention to the business plan, for the life of the investment till sale. Active investors purchase investments, continuously monitor their activity, to exploit profitable conditions. So if there's an opportunity to go ahead and increase LOI, they're going to work with either their self-management company or their third-party company to really just minimize expenses and drive the NOI. Sometimes that's easy, sometimes it's not. But what I mean by easy is not so much heavy lifting for the experienced sponsor. So the active investor also is always staying in tune with the market to find buying opportunities. They're working the business plan to seek opportunities, as I already explained, to increase NOI. But going back to staying hip with the market is, you got to really know your demographics in the area where you're buying, looking to purchase the asset. If you know it well, if you got proof of concept because you've already been in the market, you can, go ahead and recreate that business plan all over again because you've done it maybe down the street. So that's part of the active side. Also, you got to know when the best time to sell the market. Yeah, we as sponsors, we look to project down the road, and we are very conservative when we do that, right? So, we might say this is a 5-year hold or a 7-year hold, but sometimes the market changes. So you got to build in that cushion to be able to hold it a little bit longer if you need to. Or maybe if it's the right time to sell sooner because, something changes where the market is in your favor at that time. So I'd like to move on to passive investor. What's the passive investor? Usually that's the demographics of this audience. And, it's a busy professional that doesn't have the time to go ahead and look in the real estate market. Or they have every intention to go and buy a 3-family or 4-family or 2-family. And then they figure out, wait, there's a lot to do. As I just mentioned, the active side of it, right? So maybe they just want to have a hands-off approach, right? So a passive investor is one who just does not participate in the day-to-day operations and decisions of running a company, right? Usually referred to as a limited partner. And the active, let me get back to that one, is referred to as the general partner. I failed to mention that earlier, my apologies. But the passive investor, LP, or limited partner, if you want to get into the terminology or the quick pronunciations of it, the LPs commonly are known for just investing in pension funds and mutual funds or out ETFs, right? But real estate is starting to creep into those portfolios. So they want to protect themselves with a hard asset. So passively investing in real estate comes in a few forms of hard money lending or investing as a JV opportunity where someone might provide the capital and the other one might manage it. But a whole hands-off approach and investing in the syndication is investing as an LP and just providing the capital and seeking and sharing in the benefits. But like I said, this is a 3,000 foot overview. So we'll get into those in future podcasts. But you want to just make sure you vet the sponsor before going into any opportunities. But usually a passive investor is a busy professional who just loves to do what they do on their day job, but they just want to create other opportunities for maybe it's another income stream, or maybe it's sharing the tax benefits that real estate provides. And there's many other benefits as well. We can get into those later, but those are let's just stick with those two high level points right there. Now, what happens when you marry the two together? When you have the general side and then the passive side, right? The limited side. The general side meaning active side, and then the passive side. So you got the general partners and then you have the limited partners. What happens? Well, they both benefit each other and yet complement each other. Maybe they complement the passive investors' portfolios complemented by the general sponsors' opportunity, their investment, their next offering, right? Maybe they just like the opportunity that the general partner is providing. Yeah, that's the best way to say it. And then they jump into the deal, but there has to be an established relationship. And we'll get into that later on in future podcasts. But like I said, this is a high level overview. Now, the active investor will find, manage, and sell the asset on behalf of the passive investors as a general partner. The passive investor will provide the capital as a limited partner and share in the profits of the producing asset. So when you do all of those together and you marry those together, there's one side that's finding the asset, and then they're reaching out to their limited partners and they're saying, this is the product, this is where it is. This is where this is our business plan. And then when the passive investor decides that it fits their criteria, and they're comfortable with the sponsor, they go ahead and invest in the opportunity. And then they go ahead and they let the active investor work the plan while they sit back and they get newsletters, they get updates about the asset. The passive investor will get the updates in the newsletters from the general partnership in regards to the asset and how it's performing, what's going on, what happened, if there's been any hiccups, or if everything's just going according to plan. Now, that is just an overview, and I thought that would be very helpful to kick off this episode 1, and I'm super, super grateful to be able to share that. Appreciate you guys for tuning in. Thank you for tuning in, and until next time, have a great day.